Magalie, let's start off here with the subscriber numbers here. And I know Netflix sort of wants to move away from that and have us focus more on profitability here. But right now, you've got consensus estimates, at least the ones tracked by Bloomberg, coming in at about 6.2 million additions or so on a net basis here. I think your numbers are maybe slightly above the consensus. Is that the case?
That is correct. Yeah, we're at 6.4, so we are above the street. And what we're seeing there really is a continuation of benefits from paid sharing. So that's continuing to benefit the overall subscriber addition trends. Did see some signs of weakness on the retention front developing in the U.S., specifically at the back end of the quarter. So we did pull back on our estimates in UCAN slightly based on that retention weakness, but overall expect the subscriber addition trends to be healthy.
For a company, Magalie, that of course has really tried to get investors to sort of break free from years of tradition where we all sort of obsessed over those net additions every quarter and to focus more on profitability. There's a big question right now about whether we're going to see a price hike out of them. I think they're probably the only major streaming company that didn't hike prices already this year.
Yeah. So I think that's something investors are really going to be looking for in today's print and call. A lot of people think, after the writer's strike calms down here, that we are going to see them hike prices. And I think that will be needed for investors to get, more positive on the name, given all of the ARM headwinds that we're seeing. We expect them for ARM to really talk negatively again this quarter, similar to what we saw in Q2 and some of their recent, conference commentary. So we are continuing to see those ARM headwinds, but would hope that they're going to give us a little bit more clarity around upcoming price hikes.
And how does Netflix compare against its peers right now? Is it still firmly in the lead? It's interesting to read some commentary from Bloomberg Intelligence, for example, who recently wrote that competition from Amazon Prime, Peacock, and Paramount Plus is intensifying. Do you see that as well?
We actually think that Netflix is really continuing to hold the #1 position in the industry. So we also cover a lot of the other streamers in the space, Disney Plus, Max, Paramount, etc. And we think a lot of the other players are struggling on certain fronts, not only profitability, but also some of them, integrating multiple different segments of their service into one and trying to improve retention. We're not necessarily seeing that play out for some of the players. So something like Max, they recently integrated Discovery Plus in an attempt to improve churn for the overall service. We don't really see signs of that yet. Where we do see Netflix really holding the #1 position is on long-term retention. So we do think that, they're really continuing to be a leader in the space.
And what does that come down to? Is that just the content pipeline when you think about some of the other products out there?
Yeah, I think a lot of it is the content pipeline, which we did see, services like Max, for example, they already started to pull back on content even before everything happening with the writer's strike because of cost-cutting measures. Not so much at Netflix, so we didn't, see the same phenomenon happening before the writer's strike. So I do think a lot of it does come from, superior content.